Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's going on in the Russian economy. The Russian Ministry of Finance have published the figures for the period through to the end of July, which show that the budget deficit has increased further to $29 billion. And the two main drivers for this increase in deficit are the fall in revenues that Russia is experiencing as a direct result of the sanctions being applied by the West, and also the huge increase in defence spending. And unfortunately, from Russia's point of view, as a result of the problems in the economy, the Russian ruble is on the slide again. If you've been following the channel, you'll know that in the middle of August, the Russian ruble actually slipped below the 1-to-100 level against the US dollar. Then as a direct result, President Putin ordered the central bank to do something about it. They organised an emergency meeting and increased interest rates by 350 basis points or 3.5%, which had the short-term impact of improving the exchange rate back below the 100 level. However, over the course of the last week or so, we have seen the ruble starting to slide again. So in today's video, I'll have a detailed look at the $29 billion deficit that Russia has posted and see how this compares to this time last year. We'll have a look at the latest situation with regards to Russia's income from its fossil fuel exports. We'll have a look at the latest announcement in terms of Russia's defence spending for 2023. We'll take a look at what's going on with Russia's National Wealth Fund, which is funding the deficits that Russia is posting. We'll have a look at the latest exchange rate for the Russian ruble. We'll take a look at the estimated cost of the war in Ukraine so far in terms of the financial investment, but also the people costs. And then finally today I'll wrap up with my summary as to what I think is happening in the Russian economy, what's likely to happen over the course of the next 3 to 6 months, and what the impact of this will be for the global economy. Shortly after the invasion of Ukraine started, Russia announced that it was no longer going to publish detailed financial information because the Russian authorities deemed this to be sensitive and could be used against them in terms of additional sanctions. However, the Ministry of Finance in Russia is releasing some data, and this chart shows the monthly position for the Russian economy over the course of the last 12 months. All of these figures are quoted in billions of Russian rubles, with the scale on the right-hand side ranging from 1 trillion rubles positive at the top to 4 trillion rubles negative at the bottom. And the figures quoted for each month are a rolling 12-month cumulative position. So if we start off by looking at the overall trend, you can see that in the first 4 months, which were August, September, October and November 2022, the Russian economy posted positive figures, and in October and November the surplus was actually increasing. And at first glance that might seem surprising. However, there are two main drivers as to why Russia was still in surplus at that period. The first is that the sanctions being applied against Russia were not really fully effective until the end of 2022. The European Union, which had been Russia's biggest customer in terms of purchasing natural gas and oil, did not impose an outright ban on the purchase of crude oil until the 5th of December, and the ban on refined oil products such as gasoline and diesel was not introduced until the 5th of February 2023. So as a result of that, in August, September and October, Russia was still making sales to the European Union. And actually November turned out to be a boom time for Russia because the European Union countries knew the ban was coming, and a number of countries took the opportunity to make large purchases from Russia ahead of that ban being put into place. And in addition to the delayed impact of the sanctions, the price of oil in August, September and October was still relatively high because the slowdown in the global economy had not kicked in fully by then. However, from November onwards, we saw a fall in the price of oil as the global economy started to slow down, and that had a negative impact on the income that Russia was receiving from the sale of all of its fossil fuels. Now, if we have a look at what happened in December 2022, you can see that there was a huge swing in Russia's performance. Russia posted a surplus of 743 billion rubles in the 12 months to November 2022. However, 1 month later, the 12-month rolling position was negative 3.3 trillion rubles, which equated at that time to around $47 billion. Now, as we've just discussed, the European Union did introduce a ban on the purchase of oil products on the 5th of December, and that certainly did have a negative impact in Russia, but I'm not sure whether it had a 4 trillion ruble impact in 1 month. And I think the huge swing that was seen in the final month of 2022 shows that there were a lot of costs that Russia were not posting to its budget, which it then decided to put through in the final month of the year. But the official full-year outturn for 2022, as provided by the Ministry of Finance in Russia, was a deficit of $47 billion, which is huge, and that figure needed to be funded from Russia's reserves. And as far as we're aware, that financing came out of the National Wealth Fund. Now, if we look at the situation for 2023, you can see that Russia has posted a deficit in every single month. And the latest deficit posted for July 2023 is 2.8 trillion Russian rubles, which equates to around $29 billion. Now, you may be looking at that figure and comparing it to December 2022, when the official loss was $47 billion, and thinking that 2.8 trillion rubles should actually be a lot more than 29 billion. But the key difference today is the value of the ruble. Back in December 2022, $1 was trading for around 70 Russian rubles. Today, it's around 96. So the US dollar equivalent of 2.8 trillion rubles today is around 29 billion. However, if the exchange rate was still running at around 70 rubles to $1, the US dollar equivalent of the loss in July would be around $40 billion. So perversely, the fall in the value of the ruble actually makes the deficit that Russia has posted in the first 7 months of 2023 appear smaller than it would have been if the value of the ruble was higher. But in terms of digging down and looking at exactly what's happening in the Russian economy, looking at these figures in rubles actually compares like for like. And if you look at the shape of the chart between January and July 23, you can see that there is a clear downward trend. And the reason for this is the loss of income that Russia has suffered as a direct result of the sanctions. So let's have a look at exactly what's going on with Russia's trade. Now, before we go on any further today, I want to talk to you about today's sponsor, Viva. If you're interested in completely transforming your room through the use of LED lighting, then you need to check out Viva's incredible smart TV backlight kit. It's simple to install and operate, uses high-quality LEDs, and will completely change the way that you're experiencing anything on your TV. The system can be integrated with other smart home devices, such as Amazon Alexa or Google Assistant, or you can simply control it via the app on your phone. If you love movies, TV series, gaming, or would just like to upgrade your home with cool custom LED smart lighting, then this is the product for you. Viva offers you many different smart and interactive LED lights that let you customize your home and make it look and feel unique. So if you're interested in making a purchase either for yourself or as a gift, click on the link in the description below, and the great news is that you can get a 15% discount by using the code JOEBLOGS at checkout. This chart shows Russia's daily income from fossil fuel exports dating back to January 2022. Now, whenever I post a chart like this, I get comments in the section below from people saying, "Why are you showing us the same charts over and over again? I've seen this chart before, I don't want to see it again." Well, the reason that I'm showing you the same chart is that firstly, we've got limited data coming out of Russia, so it's quite difficult to be able to find detailed information. And secondly, it's a really important chart in terms of explaining what's going on in the Russian economy. So in the absence of any other additional information, this is really our go-to measure to find out what's going on right now. And this chart takes us up to the 20th of August 2023. So it's current and it's live and it gives us real-time data. As we've discussed before, Russia, being one of the largest countries in the world from a geographical perspective, is asset rich. It has a lot of fossil fuels, and those fossil fuels are valuable and other countries want to buy them. And the colour coding on this chart shows the different types of fossil fuels that Russia is earning money from. The blue section at the bottom is coal, which you can see is relatively small and relatively stable. The purple section above that is crude oil, so oil in its very basic form, literally as you pull it out of the ground, put it onto a tanker and send it to somebody else who then has to do all of the refinery process to turn that crude oil into products that you can actually use. The light brown or beige section above that is liquefied natural gas. So this is gas that Russia is extracting from the ground in its gaseous form, which is then converted under pressure into liquid so that it can be transported over the sea to countries that want to buy it. Above that, we've got a very, very thin blue line that is basically impossible to see, which is liquefied petroleum gas, which is similar to liquefied natural gas but comes from oil. The lilac section above that is refined oil products. So this is crude oil that's been through the refinery process in Russia. And then the finished products like gasoline and diesel are exported and sold at a much higher price than crude oil. And then the orange section at the top is pipeline gas. So this is gas that Russia is supplying directly to some of its customers through pipelines that it's constructed over the course of the last 30 years. Now let's talk quickly about the trend as to what's happened over the course of the last 18 months. In the initial period following Russia's invasion of Ukraine, which commenced on the 24th of February 2022, Russia saw a huge increase in its income from fossil fuel sales. And this was driven by two factors. Firstly, the price of all fossil fuels rose in the international markets as a result of the uncertainty that was caused by the war. And secondly, as we discussed earlier in the video, it took some time for the sanctions to actually take effect, predominantly because a lot of the European countries were buying huge amounts of oil and natural gas from Russia, and it was very difficult for them to be able to find alternative suppliers, particularly for natural gas, because countries such as Germany were receiving large volumes directly via pipelines. So as you can see, the daily value of fossil fuel sales for Russia increased from around 775 million euros per day, which is the equivalent of around $850 million, to 1.2 billion euros per day, or around $1.3 billion by the middle of March. So at that point in time, it looked like the Ukraine war was good for Russian business. However, as you can see, over the course of the last 15 months or so, Russia's income from fossil fuel sales has reduced steadily and significantly. And today, Russia is earning around 500 million euros per day, or around $550 million. And if you look at the breakdown as to where Russia has lost those sales, you can see that the vast majority of income that it's lost has come from pipeline gas, as a direct result of the fact that the majority of Europe has stopped buying. There's also been a reduction in revenue from refined oil products because countries such as India and China, who have been buying large quantities of crude oil, don't want to buy expensive refined products when they are perfectly capable of refining crude oil into finished products themselves. And there has also been a reduction in income from crude oil sales as a combination of both the fall in international prices and the huge reduction in volumes that Russia is selling to the West. And the overall summary here is that at the start of 2022, Russia was earning on an annualized basis around $310 billion per year from the sale of its fossil fuels. During the peak period when prices rose dramatically, the annualized income was around $475 billion. However, today the annualized income is $200 billion. So that means that compared to this time last year, Russia has lost at least $110 billion worth of income. However, if you compare it to the boom time, the loss is closer to $275 billion. And as we discussed earlier in the video, it is this loss of income which is the key driver for the problems that are being experienced right now in the Russian economy. Alongside the fall in income from fossil fuel sales, one of the other major problems that the Russian economy is suffering from right now is the huge increase in spending on defence, predominantly the war in Ukraine. This chart shows the breakdown of Russia's budget dating back to 2018, which was the last time that Vladimir Putin was elected as president of Russia. Now the scale on the left-hand side of this chart is shown in trillions of rubles, going from 0 at the bottom to 30 trillion at the top. And the colour coding from bottom to top is national defence in dark red, national security in light red, national economy in dark blue, education in lighter blue, healthcare in slightly lighter blue, social payouts in very light blue, debt servicing in dark grey, and other at the top. So if we start off by looking at the overall trend, you can see that in 2018, total spending for the Russian economy was budgeted at 16.7 trillion rubles. However, over the course of the last 5 years, that spending has increased, and the budget for 2023 was originally set at 29.1 trillion rubles, which represents an increase of around 75% against the figures from 2018. And if we look at the breakdown of these charts, you can see that the two sections that have increased the most over the course of the last 6 years are defence and national security spending and social payouts. And if you specifically look at 2022 and 2023, you can see that the red sections at the bottom are the ones that are increasing the most. In this original budget for 2023, domestic security spending was set to rise by 50% to 4.4 trillion rubles. while spending on the national economy, including roads, agriculture, and research and development, was set to fall by 23% to 3.5 trillion rubles. Interestingly, healthcare spending was budgeted to fall by 9%, so a cut of 1.5 trillion rubles, while spending on education was budgeted to be cut by 2% to 1.4 trillion rubles. Social spending, which includes payments such as pensions and welfare payments, and have been a cornerstone of President Putin's domestic economic policy used to court voters in previous campaigns, was set to rise by 8% in 2023 to 7.3 trillion rubles, which is still significantly less than the combined military and security budget. Now, the figures shown on this chart were the original budgeted figures that were released by Russia in November 2022. However, it's now been announced that Russia has doubled its 2023 defence spending target to more than $100 billion, which represents a third of all of its public expenditure. And the reason that Russia is increasing its budget so significantly is that in the first half of 2023, Russia spent 12%, or 600 billion rubles more on defence than the 5 trillion rubles that it had originally targeted for the whole of 2023. And obviously an increase of this nature has to be funded and will put further pressure on the Russian economy during the rest of 2023. This chart shows the movement in the value of the Russian ruble against the US dollar over the course of the last 12 months. And as you can see from this chart, this time last year, $1 US was trading for 60 Russian rubles. Today it's trading for more than 96 rubles. And if we expand the chart out to show the position over the last 5 years, you can see that the only time that the Russian ruble was trading at a worse rate than it is currently was in the very brief period following Russia's invasion of Ukraine, when we saw the value of the ruble crash and was trading at around 125 to $1. However, the Russian central bank quickly stepped in to address that position. They started buying rubles in the international market at the same time as the total size of the market shrank, so that made it easier for the Russian central bank to be able to manipulate the price. And the price soon recovered to $1 to 60 rubles. And if you remember, at that time, a lot of press commentary was stating that this proved how strong the Russian economy was, that the value of the ruble was intrinsically linked to the Russian economy, and therefore, as the ruble had bounced back so significantly, this meant that Russia was going to be entirely unaffected by the sanctions. However, what we've seen over the course of the last year is that the Russian central bank simply hasn't been able to continue manipulating the price. And as we've moved towards a free market value, we've seen the value of the ruble crash. Now, if we zoom in and have a look at what's happened over the course of the last month, as I mentioned at the start of the video, on the 14th of August, the value of the ruble actually passed the 100 mark. $1 was worth more than 100 rubles. So basically, this meant that 1 US cent was equivalent to 1 Russian ruble. And it turned out that that position was simply unacceptable from President Putin's point of view. Instructions were issued to the Russian central bank to do something about this. They organised an emergency meeting, announced an immediate increase in interest rates of 3.5%, and that led to a recovery in the value of the ruble. And you can see that between the 14th and the 17th of August, the value of the ruble improved and was trading for around 92 to $1. However, if we now look at what's happened over the course of the last couple of weeks, you can see that the value of the ruble has started to deteriorate again. And the reason for that is that markets look at fundamentals. And the fundamental issues, as we've discussed already in this video, relating to the Russian economy, are that there has been a significant loss of income from the sale of fossil fuels as a result of the sanctions, and a significant increase in spending on the war in Ukraine. And those two factors mean that the Russian economy is losing money, it's posting deficits, and therefore from a credit point of view it's less attractive. And also from a trade perspective, it means that countries don't need to buy rubles. And in fact what we're seeing is that the increase in trade that Russia has achieved with countries such as China and India, those deals are being done in Chinese yuan and Indian rupees. They're not being done in Russian rubles. So this is further reducing the demand for ruble and therefore is having a further reduction on the price. And the reason I wanted to share this with you is that the increase of 350 basis points that was announced by the Russian central bank, taking interest rates to 12% in Russia, has not solved the problem. And if the Russian central bank wants to continue keeping the price of the ruble below the 100 level, it's likely that we're going to have to see more interest rate increases. And the knock-on impact of that could be really devastating for the Russian economy, because when you've got extremely high rates of interest, it means that nobody wants to borrow any money. It discourages companies and individuals from taking on money that they may then invest into their businesses. And if we see a reduction in investment, that could have a further detrimental impact on the long-term growth for the Russian economy. Now, as we discussed earlier in the video, Russia is having to fund its deficits from its national wealth fund. This is basically Russia's piggy bank. And the Russian finance ministry has announced that it recently spent 807 billion rubles, or 8.9 billion US dollars, from the wealth fund on infrastructure projects, corporate support, and covering the government's budget deficit in the first half of the year. The National Wealth Fund, which is essentially a rainy day fund built up from years of profits on oil and gas exports, stood at the equivalent of 145.6 billion US dollars as of the 1st of July, which represents a reduction of around $8 billion compared with the position on the 1st of June. Interestingly, the Russian ministry announced that they've sold 67 billion rubles, or the equivalent of $740 million, of Chinese yuan and gold from the fund during June to cover the government's budget deficit. So essentially what the Russian government is having to do right now is cash in gold to fund the cash losses that the economy is posting. So what's the summary and conclusion today? Well, I wanted to post this video really to give you an update as to what's happening in the Russian economy. And what we've seen from today's data, which was provided by the Ministry of Finance in Russia, is that the deficits are continuing to be posted and that those deficits are getting larger. The trend for the Russian economy is downwards. Russia is continuing to lose large amounts of money, and there are two main reasons for that. Firstly, Russia has lost a lot of trade. It's seen the value of the sale of its exports of fossil fuels fall significantly over the course of the last 18 months. As a result, firstly, of losing a lot of customers, so all of its previous customers in the West are no longer wanting to buy any of its products. But also, in addition to the sanctions, there has been a decline in the market value of oil and natural gas as a result of the global slowdown. As a lot of economies move towards recession, there is a reduction in demand for those products, and therefore, as we know from simple economics, when the demand for something falls, it generally leads to a reduction in the price. So Russia is seeing a large fall in the amount of cash that it's receiving in, and at the same time, it's also increasing the amount of cash that it's spending on the war in Ukraine. And as we've seen from the data in today's video, despite the fact that defence spending had increased significantly in the 2023 budget, at the halfway point of 2023, Russia have announced that they're now doubling the amount that they're going to invest in the war. And this is obviously really bad timing from the economy's point of view, because they're budgeting to spend more money at a time when their income is falling. So if you were Russia's bank manager right now, you would be saying, I'm sorry, I'm not going to give you any further increases on your overdraft because you're spending too much money. You need to cut your spending back. But obviously, from President Putin's point of view, he's made official statements that there is an unlimited budget in terms of the war in Ukraine. He's prepared to keep going as long as it takes to win this war. And as we've also seen from the data in this video, the cost of this war so far is extremely high, not just to Russia or Ukraine, but also to the global economy. Virtually every country in the Western world has provided direct financial support to Ukraine to help fund its efforts. And that is having a drain on the global economy. And the war in Ukraine is one of the reasons why we're seeing a slowdown in the global economy. We've got factors such as high inflation and increasing interest rates, which are obviously having direct impacts. But the fact that over $165 billion of cash has been given to Ukraine so far, in addition to the other forms of support that are being provided to people who've been displaced from Ukraine, all of this is dragging down the global economy. And as long as this war continues going on, it will have a negative impact on the globe. So the overall summary of today's video is that the Russian economy is continuing to do badly as a direct result of the sanctions that are being applied against it because of the war in Ukraine. And unfortunately, from Russia's point of view, it doesn't look like there's any end in sight right now to that war. So this position is likely to continue. It's likely that Russia's economy will continue performing badly. It's likely that the value of the ruble will start to fall again. It may well pass the critical 100 level again, so we might see interest rates being racked up to try to bring it back under control. That's going to cause further problems in the Russian economy, and so it goes on. But unfortunately, the issues here are not contained just to Russia. Because of the level of support that's being provided to Ukraine and all of the nervousness about what's going on globally, we're continuing to see a slowdown in the global economy, and it's likely that over the course of the next 3 to 6 months, we may well see more economies moving into a state of recession. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.